Hi, this is Dion Lyle with Cherry 25. With this week's Fintech-5, I'm going to address how banks can be competitive. What should they do? Well, Chris Gledhill on Twitter asked a really interesting question this last week. Fintech poll. Should banks buy a digital bank, build a digital bank, or transform the old bank? And you can see there, 1,000 votes. 33% said transform, 30% said build, 36% said buy. I vehemently disagree with that 36%. So my reply to that was Team A, make our bank the best it can be. I said incremental innovation. I didn't mean incremental. I meant transformational. Team B, separate, minimal constraints, build a new bank from the ground up. Let 3 years pass, pick a winner, or keep them both going. This is not an unusual strategy, by the way. I pointed out years ago that Apple, after introduction of the Mac, had a multi-million-dollar business with the Apple II for years, for almost a decade. They ran a very profitable, fantastic business. The Apple II thrived and more than just survived. They had accessories. They had all sorts of stuff going on in the Apple II. And you can see by this chart from Wikipedia that there were versions of the Apple II still coming out after the Mac. That's because they had two separate teams. Yeah, they did the pirate flag and all that crazy Steve Jobs stuff. Very cool, not required. The other thing is, this is not a new strategy. BCG has had this matrix about cash cows, dogs, stars, question marks for years. And basically what they say is take your cash cows and let it be a low growth business. Use that to fund the stars, the newer ones, the hot ones, the Mac, right? So you got acquire a digital bank. Take your legacy bank, acquire through M&A, and put it into your bank. Here's the problem. The only example I could think of, I'm sure there's a couple other, simple BBVA. I'm not sure that went really well, all due respect to everyone involved. Culture fits hard, regulatory issues, the tech stack integration, the cost of the acquisition today. Look at neobank valuation today. I don't think you want to buy any of those. So build your own digital bank. And I showed different color blocks here. Here's why this is a great option today. The tools are better than ever. You do have to figure out who's going to do the build, how internal is it going to be, how external, and set very strict cost and completion guidelines and let it run like a startup. And then finally, innovate. Innovation inside is hard. I'm sure a lot of my viewers have been there, done that. I know I have at Citi and First Data both. But external parties can help, and you can partner with neobanks and fintechs. But get your legacy bank moving forward. So in summary, don't do the acquisition, do build a digital bank, and do innovate your own bank. So why tools? Well, I think this is one of the biggest changes to come along for this question. And that is why Plaid was worth $5 billion to Visa. You have banking as a service tool, Rails Bank, Silas, Synapse, Camber, and others are coming. You have connector APIs, Plaid, of course, Tink, lending as a service, card issuing platforms, the great folks at Marqeta, Galileo too, brokerage apps. Modern Treasury is one that does a great job in payments. Dual has been around a while. All these tools are available for you. And I got this from Chris McCann's Fintech Infrastructure 101. Really good paper. You should look it up. So one thing I always beat the drum on is R&D, research and development. No bank does it. Look at Amazon, 22 billion, Google 16, Microsoft 13. But look at the percentage of total sales. Facebook puts 19% of their sales to R&D. Facebook. Amazon puts 12%. No bank does hardly anything, right? And look at this quote. Rarely would I ever quote Steve Ballmer. The lifeblood of our business is that R&D spend. Today, Microsoft is still doing that R&D spend. That's how they've recovered. That's why they're a player again. Your bank can't afford this, but what you can do as a bank, reach out to the VC community, the startup community, and start to engage with those people who are funded by VCs. Take advantage of that, right? Now, here's an interesting one. Goldman Sachs and Jim Maris's Financial Brand did a fantastic write-up on this. Please look it up. It's Financial Brand. You'll find it, Goldman Sachs. Goldman Sachs actually is committed to R&D. Their engineering spend of $4 billion in 2019, 53% to run the bank, 47% for growth. Still not actually R&D, but it's the closest I could find for a bank. I think JP Morgan's doing a fair bit as well. But look again from Jim Maris's Financial Brand. Look at the growth in customers, deposit, revenue from Goldman Sachs for Marcus. The other thing, people say, oh, well, Goldman Sachs did a lot of acquisitions to get where they are. It's not actually true. What they did was acqui-hires, which is really different. You don't have as much overhead. You get a team, you get some technology, you get a little bit of this and that. Maybe they bought a customer book with Clarity or GE, but overall, these are not actual digital bank acquisitions. That's really important. So in summary, build a digital bank, use the new tools, integrate fintech solutions, partner, do it outside the bank. Fix the legacy. Same recommendations, by the way. Use new tools, integrate fintech solutions, partner, but do it inside the bank. Keep these two streams separate, and I am pretty confident you will find best of both worlds with this strategy. Thank you for watching.